Aloha, and welcome to another episode of Atlas Insurance's Risky Business. My name is Sean Satterfield.
Choi.
And today we have Sharilyn Tanaka. Sharilyn, please introduce yourself.
I'm Sharilyn Tanaka with the Personal Lines Department. I've been here at Atlas for 17 years. This year will be my 18th year. I've been in the industry for over 20 years, which is hard for me to say. And for personal lines, I've been in personal lines for all of my career. I've done some other things outside of personal lines, but personal lines does the homeowners, the individual condo unit owners, personal umbrella. If you own it individually, we can insure it. And personal lines is my passion. I can talk about it all day long if anyone will let me. I don't want to bore anyone, so I will not do it. But just love it. And I got into insurance straight out of college, as a lot of people have. And it was just by chance. I applied everywhere during my senior year of college at UH. The only company that took me and called me back was an insurance company. Mm-hmm. And I just took a chance and decided to work there for a couple years before I decided what I wanted to do with the rest of my life. I never left. I loved it ever since.
That's awesome. Well, I know that we work very closely to the personal line side. Mm-hmm. And one of the things that we work on the condo side, the AOL side, is HO6 insurance. Mm-hmm. Can you explain a little bit about what HO6 insurance is and why it's important?
HO6 insurance is the individual unit owner policy, and it works hand in hand with the master policy. Mm-hmm. The HO6 policy covers the interior space of the condo for any upgrades or changes that were made to the unit since original inception. Since the original was, the building was originally built, whatever changes were made, even though the building was built in the 70s, over the years, you could be the fifth, sixth owner, but we want to look at all the changes that were made to the interior of the unit, and that's what we're covering, along with your personal property as a homeowner, and also your personal liability, which liability is the most important coverage on any policy out there.
Yeah. So when I think about HO6 insurance policy and I explain it to condo owners, I basically say, hey, if you have a cup and the water is your contents, mm-hmm. and you turn the cup over, everything in the water that comes out, mm-hmm. that's what HO6 insurance insures.
That's, it is a good analogy. And mm-hmm. how I would use that as well, just a little bit further, is anything that's stuck to the walls is considered your interior. So mm-hmm. that's the flooring, countertops, cabinets, bathroom fixtures. Those are all the things we're looking at, all the changes that were made. Mm. So if the cabinets were, the older cabinets, but now it's coal wood or whatever new cabinets that there are, we want to ensure all of those upgrades, yes. anything from all of that. And when you take that unit, you turned it upside down, everything that fell is part of personal property. Anything mm-hmm. you can take with you mm-hmm. is part of your personal belongings. And that's something that we also insure under the HO6 policy.
Great. Hey, Shane, can you maybe talk a little bit about the master policy and why that's
just important? About to. So the master policy, so as you were saying, the units, interior of the units, improvements, betterments, contents, personal liability, I think you mentioned. Mm-hmm. But for the building itself, so building covers the structure mm-hmm. and the interior of the unit, but as originally built. Mm-hmm. There's a little bit of complementary, or I would say the HO6 is complementary or supplementary to master policy, but in my mind, there's two kind of coverages that kind of a little bit more different about HO6 are very important. One of them has to do with the deductible, and I know that's kind of a little bit of a complicated thing to talk about, mm-hmm. but talk to a little bit about what the association's master property insurance deductible, how that comes into play with or integrates with the HO6
policy. So the AOL deductible, as you know, it's different amongst different buildings depending on the risk and the previous losses. And most buildings want to make sure that the individual unit owners have coverage to pay for that AOL deductible. And unfortunately, every insurance carrier handles the AOL deductible differently under the HO6 policy. And as agents, it's our duty to understand how each carrier is covering all of the AOL deductibles so that we can make sure that our clients are protected. And sometimes the difficulty that we have in these AOL deductibles is sometimes it's twofold. One is that the AOL deductible can be really high.
Mm-hmm.
Like we've seen it, you folks have seen it more than I have, but sometimes it's 100,000, 250,000. Mm-hmm. We've seen it up to 500,000. The challenge that those high deductibles cause for the individual unit owners is that you're pushing the onus to the individual unit owners and under the HO6 policy. Mm-hmm. The HO6 policy was never designed to handle an AOL deductible of 500,000, 250,000, because the HO6 policy, as it was originally designed, the premium or the rate for it at the long ago was like $150. Mm-hmm. So you're pushing these high limits to these HO6 unit owners. And so that kind of led to a lot of confusion and a lot of chaos a little bit in the HO6 market. And, you needed to have these high deductibles for the buildings because of frequency of loss in the building. So it's understood why it happened. It was just the market trying to react and trying to get an understanding of how we're going to continue to do this. The second part of why it can be confusing for homeowners and then also us as agents trying to navigate this market is sometimes we've seen these AOLs have two deductibles. One is for an AOP deductible, which is all other peril, and then the other one is for a water deductible. And so as a homeowner, you're unsure, what am I supposed to do? What deductible am I supposed to cover? Do I need to cover it? Or, and there's all this confusion, which makes it a little confusing in our world. But, as agents, that's our duty, right? We need to provide the information to our client, help educate them so they understand what they're paying for.
Knowledge and the know-how.
Mm-hmm.
Right?
Mm-hmm.
And going back to those two different deductibles, I guess in practical terms, you would go with the higher of the two?
Yeah.
Because you want that higher protection.
Yeah, right. Because under the HO6 policy, we have no way to decipher that this should only be used for all other perils or this one should only be used for water. We have no way to decipher under the HO6 policy because one is never designed for that. And so, yes, we have to go with the higher deductible, which can be, confusing for the homeowner to understand because if we're looking at a AOP or all other peril deductible at 100,000, that's what the homeowner needs to cover. And it can cause their rate to increase pretty significantly. Right. And so if you're trying to save money, most people don't want to pay that higher rate, but it is necessary in order for them to be protected properly.
And digging a little bit further into the deductible, you said all of the perils, so all of the perils other than like water damage, then hurricane, then flood. Mm-hmm. So it's going to be things like fire. Fire is the, water is, water common. Is the most common cause of loss in a condo and then fire.
Yeah, some of the history that we know in being in the industry is that water has always been the number one thing. That's why it's a separate deductible all by itself. And we've seen deductibles go from maybe 10,000 to 25,000 to 50, like you said, to 100. Tell me a little bit about what is kind of the most favorable deductible, if you will, and when does it get kind of a little bit out of price where underwriters or carriers, if you will, may shy away?
The deductible, anything under 100,000 is great. Okay. 25,000, I remember that there were deductibles back in the day that were like 5,000.
Yeah. Right.
Man, those good old days. And then it went up to 10 and that was like, wow, that's such a high deductible.
It doubled.
It doubled. And then now if I see a deductible at 25,000, as an agent that's been in this business, I know that it's because that building has good losses. They haven't had losses. They've been able to manage it. They probably have updates. So I know already that they have good losses. Once the deductible is, 75,000 or 100,000 or even higher, then as agents, we know that there's probably been a frequency of loss in that building. And so as an agent, since I know that, our carrier underwriters know that as well, which makes it more difficult for us to find placement of coverage for those homeowners. One of the difficulties that we have in our market as well is when the deductible for the AOAO is high, and that specific homeowner or unit owner has had also multiple losses in that unit, that becomes virtually impossible for us to find coverage. And so that's the struggle that we're having right now in our market is how can we find, I've been in this business long enough, I've always been able to find coverage for any type of risk. Always. It's never been an issue because we work with so many different carriers. Today, that's my number one concern is how do we get coverage for someone that lives in a building that has a high deductible and they have also experienced a couple of losses in their individual unit. And as you know, if I'm a homeowner and I've had a couple of losses in my unit, typically it's because of my neighbor.
Right.
Whether they're above or next to you. It's typically not me that is the cause of the loss. And that's the issue because you cannot control your neighbor. And so that is what becomes difficult for us to find coverage for these types of risks.
The reality of living in a condo. Right?
It is.
You share the space
you share the space. Yeah, because you can't control your neighbor.
You can control what you do.
You can control what you do. Yes.
And what we've experienced, and some of our other guests is basically you really want to have maintenance control or just really upkeep on the building because if you don't upkeep the building, there's some issues that happen.
Yes.
Tell us a little bit about your thoughts on what homeowners can do from a personal standpoint, to upkeep maybe their condominium to mitigate some of those losses.
That's a great one. And that has changed over the years. Maybe even 5 years ago, someone that would look at an insurance policy would assume that the insurance policy would cover anything. Right. And now as time has gone on, a lot of the onus for the insurance carriers have been put back onto the homeowner to really ensure that they're prudent homeowners taking care of their unit, which is good. It's good for everyone. So as a homeowner, it's always good to make sure that your pipes are working, I think you guys probably see it more than I do, but one of the most common losses that I've seen is the wax ring of the toilet. And that's not something that's easily checked on, but check it, see if the wax ring needs to be replaced. And then along with that is if you're going to renovate your unit, you're so excited to maybe change the bathroom fixtures or even the kitchen, please make sure you use a licensed contractor. It's so hard because we have friends and family that want to help, and that's so great. But when you're living in a condo, if you don't use a licensed contractor, you could possibly create a leak into a unit below or even everyone below you, and that creates a huge loss. And so as a condo owner, especially if you're living in a high rise, always use a licensed contractor should you be thinking of renovating your unit.
And a reputable one. Right?
Yes.
Right. One that has insurance.
Yeah.
Right?
One that has insurance. Yes.
So.
Sometimes the AOL, the buildings or the property managers, they might have a list of preferred vendors. Sure. That's always a good rule of thumb is look at the list because they're reputable, worked in the building before, they kind of know what to do. So those are a couple of the things that I would suggest to do.
And I think Keen talked a little bit about that, having that list at the ready, because whenever something happens, you don't want to be thinking about, who do I call? You just have it right there. You call them.
Yeah. The last thing that I would recommend too as a prudent homeowner is make sure you have all the contacts, from your building so that in case a leak happens and you notice that you know immediately who to call, because you don't want to be in the situation where the leak is occurring and you don't know what to do. So just have it on your fridge or have it somewhere that anyone can see so you're able to prevent a bigger loss.
Every second.
Yeah.
So it can be the general manager, it can be site manager, maintenance, whoever it be, just to notify them that something's happening. I need to do something about it quickly.
Yeah.
Right. And you were mentioning something about it being $150 before. It was so cheap before,
It was so cheap.
And,
yes.
Back when I used to be in personal lines, and actually I used to work under personal lines. One of the things that I liked about condo insurance is because it was so easy to quote, right? It's easier than single family homes. But nowadays, the market is so hard. So what would you say are just like a couple factors that are affecting or making this a hard market? I know we mentioned a couple, but just maybe list maybe a couple or two or three.
Well, one of them is the frequency of loss is, the HO6 policy. So yes, it used to be $150 a year before. And over the years, there have been rate increases, and that needed to happen in order to compensate for all of the water losses that were happening. And so, when the HO6 policy really came out, buildings were not going through all of the pipe bursts and all of the aging pipes that are happening today. But as the years have gone on, the buildings have aged and, maybe the maintenance has not kept up with replacing the pipes and all of that. And so because of that, it's caused numerous water losses in these buildings. So that's the reason why the rates have increased over the years in order to compensate, because there was a time that if you asked an insurance carrier what their loss ratio was for HO6 policy, I think the amount that they were paying out for the claim was higher than the amount that they were receiving in premium. And so as an insurance carrier, it's not sustainable. You cannot sustain that type of business because you're not going to be able to pay out claims and you can't stay in business. And so that's no good for anyone. So the rates have had to increase over the years because of that.
And just think of it in, say for an example, in practical terms, $150, let's say maybe it's a little higher now, 450, 500, 600 maybe. If a claim is $50,000, you're paying $500. Forgive me on my math, but that's, how much is that?
It's a long time.
It's going to be a really long time. Yes.
Before they recover.
Before they recover. Right? Yeah. Right. And that's the reason why HO6 policy is really difficult now, because the premiums are really low for what could occur, because I think a typical water claim is about $30,000 cost. And so in an HO6 policy, still at $600 a year, it's really very inexpensive in terms of if there was a loss, having the HO6 policy cover that.
Right. And each of the local insurers, they have their filing with the state, so they can only increase premiums if they wanted to by little. Well,
they have to prove the reason why they can increase the premium. So yes, it is all monitored by the insurance commissioner. Yeah.
Right. Yeah. And sorry, Sean. I know we talk about this all the time. High risk components inspections. How does that play into what Sharilyn was talking about how these are things that are causing the rates to go up, but these are things that maybe we can do.
Yeah, that's one way to mitigate a lot of these issues. So high risk component inspections are very important. The building or the association needs to monitor that, and the carriers really look forward to seeing what have you done to prevent or mitigate the risks that you have, and that could include electrical, your components in your valves, et cetera, to make sure that they're working. Pipes. electrical,
toilet,
rings.
Yes,
Those are all important things. And if you're in a building that maybe somebody just uses it once or twice a year, and that you don't use it, it'll break over time, because it'll calcify, etc. So those are important things that buildings and associations need to know.
Practical things besides your preventative maintenance, right? Maintaining the pipes, making sure if it's this old, then maybe we have a reserve schedule to replace it after a certain age. Same thing for the roof, for the wires, and all of these things, they play into the claims, right? So pipes, water damage, wires, fire, the roof, maybe water damage too, or wind damage. Right? So different things causing different types of damage, but different things that you can do to prevent it, including the high-risk components inspection.
Yeah. I have a question, that brings up, it makes me think about when someone pays off their mortgage on their condo, sometimes it's like, well, if the bank is not requiring insurance, why should I get it? Tell us about your thoughts on maybe why or why not.
Yeah, I can understand why someone would not want to continue their insurance policy if it's not required by their mortgage company, because that's an expense they can not have. But by doing that, that technically means they're self-insuring.
Right.
And so I guess as a homeowner, it just depends. What is the risk that you're willing to take on as a homeowner? For an HO6 policy, as we mentioned today, I think the average rate is between like $500, $600 a year.
Reasonable.
It's very reasonable. And if there was a loss that you were held liable for, such as maybe leaving your pipe on, or you got notice from your AOL that you're supposed to change out your pipe, but you never did because you're too busy or whatever it is, and it created a loss that affected all your neighbors, maybe down below. And now you have to be responsible to pay that. Are you able to pay it out of pocket today?
Yeah.
And if the answer is no, then I think it's a good idea to still purchase and still have the HO6 policy. The second part is that it's still probably going to be required by your AOL. They're probably still going to require you to have it to show proof of it. And then the third thing is, that the HO6 policy, one, it provides coverage for the interior of your unit. And then it also provides the coverage for liability. And liability is protection for you, worldwide. Yeah. So if you're found personally liable for something outside of the property, you could still use your homeowner's policy, protect you for that. The other part is that the personal property, all of your stuff is also covered under the HO6 policy, and it's covered worldwide as well. So if you travel and let's say you lost your luggage or someone stole something from you, that would be covered under the HO6 policy. So there's so many benefits of having an HO6 policy that I would always suggest to always purchase the policy.
Yeah, and I would add that, many of Hawaii residents, your property is your biggest asset.
Yes.
And so to insure your asset is super important. Not only your stuff, but just the condo itself.
Yes.
And to your point, it doesn't necessarily have to be your pipe that leaks. It could be 3 floors above you that causes damage. And depending on how the board allocates the expenses, you could be affected. So it's really important from that standpoint.
Yeah.
I had another question in regards to just not HO6, but maybe just HO3 or maybe just insurance in general from your team. And I know you folks have many different products or whatnot, but sometimes on the higher end, we have high or very expensive condos that fall in a different category. Maybe can you explain a little bit about what those categories are on the high end side versus other types of carriers that Alice can help people with?
Yeah, sure. So we have a group dedicated to what we call our private client group. And our private client group really focuses on the high net worth. So when we look at that, we're looking at individuals or families that have an insurable assets of $5 million and higher. And so this could be condo units, it could be single family homes, secondary properties, all of that. And we look at all of that when we're looking at these properties and how to insure it. And the challenge that sometimes we have with insuring these types of properties or these high value is actually in hurricane. And hurricane, I know in your world, hurricane has gotten a little bit better. But in my world, hurricane is hard. It's rough. It is super rough. And I don't mean that in terms of, availability. I mean, there's still availability for the mass market. The cost of it is just very high. Where we are having problems finding coverage for sometimes is for these very high value homes for hurricane. And these are for homes that are valued like higher than 10 million for replacement and above. Those homes we are having a very hard time, especially if this home happens to be older. You know, they may not have hurricane clips or on the roof to wall and wall to foundation. And so those become a factor in why it's hard for us to find coverage for these types of properties. But other than that, I mean, yes, hurricane has been difficult. Flood has also been another challenge for us as well. We've seen some movement in the flood space. I'm sure you folks have seen it as well, where the flood is being less admitted. So meaning that the admitted side it's monitored by our insurance commissioner, and a lot of the flood is through the NFIP or the National Flood Insurance Program. However, there's a lot of flood today in the personal lines market that is moving to excess and surplus. And so what that means for the consumer is that the amount that you're paying for flood last year, this year, it's more than likely going to triple in premium. And so, yeah, I know it's not fun. It's not fun to have to tell our clients about that premium increase. The hard part is that I don't have an option.
Yeah. This is for single family homes.
These are for single family homes. Yes. Yeah. Those are the ones that we're
not
having.
Condos.
Not condos. Yes. Thankfully.
Right.
But yes, single family homes are the ones that we're having a hard time with.
Well, it affects Hawaii residents. So
yes.
Something that you care about, something that we care about.
Yes. Yeah.
For Sharilyn, I wanted to ask you, I know we're talking a lot about insurance, but I know you're also part of a lot of organizations. Can you talk to us maybe just about one of them, your passion for it and why you got involved?
Sure. One of the organizations that I am on the board for is called the Hawaii Homeownership Center, HO6. And I've been on the board now for about maybe 5 years. And this is a great organization that helps individuals realize their dreams of homeownership. And one of the first steps for individuals or families to realize their dream of homeownership is actually condos, because condos are more affordable. It's easier for someone to purchase a condo than it is for someone to purchase a single family home. And what Hawaii Homeownership does is, number one, I think the biggest thing that it provides is hope. Growing up here in Hawaii, we know how high the prices are for homes, and born and raised, sometimes you believe like it's never going to happen for me. It's just never going to be there. I'm never going to have the chance. And so what Hawaii Homeownership Center does is they provide educational classes for families to really learn how it's possible to purchase a home. It is absolutely possible. I have stories of families that made that dream possible. And so one of the reasons why I got involved with this organization, and I love it so much, and I truly believe in the mission, is I listened to the story. He was a single father, and he had a young child, a young son, and he didn't know how he was going to be able to find and provide a stable household. As a parent myself, that's so important, is to have a stable household for your kids so they can feel safe. Having a place to live is so key. And so he went to the Homeownership Center to provide to get some counseling on how he can earn a home. And he worked toward it. There's little things that we can do that sometimes we don't realize can make a huge difference in saving. And so he just made those little changes. Maybe instead of getting lunch 5 days a week, he cut it to maybe 1 day a week, and he cooked at home. Maybe instead of going out to dinner, every week, he cut it down to maybe once a month. There's just these different little changes that you can make in your life that will help you reach your goal. And so I love his story because he was able to purchase his first home. It was a condo, and him being able to provide this stable household for his young son. His young son went off to graduate. He graduated from Kamehameha. He was the valedictorian. And then he went off to Stanford. And so that story of just home ownership, being able to provide that stable household, but also being able to provide generational wealth for his young son that he didn't think would be possible. And so there's countless stories about that. And, home ownership for us, right? We work in the insurance space, and it's important for us as well. And so just having that ability to provide, people in our community that hope that it's possible. Right. Don't think it's not possible. You can do it. I promise. So that's the reason why I love Hawaiʻi Homeownership Center.
Such an amazing story. And I know just based off of that, everything that you put into how you run personal lines, how all the organizations that you're part of, it's really coming from the heart. And it's part of who you are.
Thank you.
I appreciate that. It's a happy story. I also wanted to talk about the happiest place on earth. I know that's one of your favorite places.
My favorite place.
Tell me about one of your favorite rides and why.
My favorite ride is not everyone else's favorite ride. I think it makes a lot of people cringe. So my favorite place on earth is Disney World. And my favorite ride is at Magic Kingdom. And it's A Small World. And I can listen to that song over and over. And I'm sorry for everyone that I just put that song in your mind. But I love it. I can sing it and not get tired of it. And it's very just nostalgic to me. So no trip for me is complete unless I ride that ride.
Oh, I love that.
All right, then I have a follow-up question. How many times have you ridden it?
Countless.
More than 100.
Oh, okay.
Yeah. Yes. I love it so much. Yes.
That's awesome. Shane, do we have any other questions for her? That's great. Sharilyn, it's been a pleasure. What a wonderful story you shared with us and all your knowledge. I really appreciate that.
Thank you. It's been a pleasure.
Thank you. All right, everyone. Thank you very much. Again, this is Atlas Insurance's Risky Business. I'm Sean Satterfield.
I'm Choi.
Bye. I'm Sharilyn.
Take care and aloha.
Aloha.